Unit 7. Listening.
I know many people think our system in Germany is complicated, but I see that in the UK you have retail banks and commercial banks. Some banks seem to be both. What's the difference between them? Can you explain?
Yes, it is very confusing. But basically, retail banks are the banks you see in the high street of every town. In fact, sometimes they are called high street banks. They offer the ordinary customer the full range of financial services, like your credit card, debit card, or customer accounts, plus, of course, mortgages and insurance. Commercial banks, by contrast, are focused on small or medium-sized businesses, and they offer many additional business services like leasing or factoring. Today, however, many of the retail banks, like RBS or Barclays, also offer commercial banking, so they provide both services. Is that clear?
Okay, so if I understand you, the same bank can be both a commercial and a retail bank. Is that right?
Yes, exactly.
Well, in that case, where do the investment banks belong? I thought they provided the commercial services to companies.
Well, in a sense, you are right. But investment banks really work on the financial markets, like the stock market. They offer specialist advice to big international companies on raising money in bonds or shares. But they also have large M&A departments, that is to say mergers and acquisitions, that help companies to buy or sell other companies. It's important to understand that investment banks don't lend money to customers or provide any of the other banking accounts that a company needs to manage its daily business. They make a lot of their money from fees by providing services to big companies.
Sorry, I didn't get that about fees. Could you go over it again?
Sure. The point I was trying to make was that investment banks don't actually lend money to companies. They make their money by arranging the borrowing for a company on the financial markets. For that, they are paid an income or fees.
Okay, so what about the building societies? What's their role? They sound like our savings banks in Germany.
Well, in the old days, building societies were basically savings and mortgage banks, which focused on the ordinary customer. But building societies, unlike banks, are mutuals, which means that the customers own the bank. Every customer who has an account becomes a member and owner of the society.
Interesting. So you are saying that the customers are really the owners of the building society. Is that right?
Yes.
Okay. But I see from your slide that there are other financial service companies like supermarkets. What do they do? How can a supermarket be a bank?
Well, that's a good question, but it's an obvious development. Supermarkets have a lot of cash, plus a large customer base who use their local retail shops every week. So, in the last 10 years, they have introduced financial services for individual customers.
What about other types of bank? I heard that the UK had internet banks, which don't have any branches, but offer banking services to individuals only on the net.
Yes, you're right, Carl. Internet banks have become bigger and bigger because it is so much cheaper for banks to manage services online. In fact, some of them have no branches to visit and only exist on the internet. These virtual banks may well be the future of banking.
Okay, so if I have got it right, there are about 6 different types of banks in the UK.
Yes, exactly.
Speaking. Exercise 1. 1.
Today, however, many of the retail banks, like RBS or Barclays, also offer commercial banking, so they provide both services. Is that clear?
2.
Okay, so if I understand you, the same bank can be both a commercial and a retail bank. Is that right?
3,
But they also have large M&A departments, that is to say mergers and acquisitions, that help companies to buy or sell other companies.
4,
Sorry, I didn't get that about fees. Could you go over it again?
5,
Sure. The point I was trying to make was that investment banks don't actually lend money to companies.
6,
So you are saying that the customers are really the owners of the building society. Is that right?
7,
Okay, so if I have got it right, there are about 6 different types of banks in the UK.
Unit 8, Listening.
Looking at the markets today, the Dow Jones Index was up 200 points and the FTSE also rose by 70 points. Why do stock markets move like this every day?
Well, it's a good question. On the whole, stock markets move on fundamentals, and these can be of two kinds, macro data and micro data. Firstly, there is the macro data, that is to say the inflation rate, interest rates, unemployment figures, those kinds of things. If, for example, the market begins to expect a fall in interest rates, like today, this is good news for share prices because it will be cheaper to borrow money in the future. So it is more interesting for companies to invest and for consumers to spend.
Yes, but surely investors are also looking at particular companies.
Yes, that's right. That is what we call the microdata. The things that affect a particular company, like a company's results or news of a big contract win. If a company announces good financial results, the analysts will probably upgrade the stock, thinking it will make more profit in the future. This will attract buyers, so the demand for the stock goes up and the share price will increase. The share price is simply telling you how much money people think the company will make in the future.
So we should be reading company announcements carefully.
Yes, of course. But we should also remember that a company's share price may be affected by the news of a competitor in the same sector. This can cause analysts to change their view of a whole sector. But institutional investors are really looking more at the longer-term trend. Is it going up or down?
Okay, but who are all these investors?
Well, generally speaking, there are two kinds of investors. There are the retail investors. That means ordinary people like you and me who are buying and selling stock. And then there are the professionals, what we call institutional investors. Obviously, in today's markets, the institutional investors are the most important and account for most of the day's volume.
You mentioned these institutional investors. Who exactly are they?
In general, there are 4 different kinds of institutional investors. First, there are the pension funds. Then there are hedge funds. The third kind is investment banks. And finally, there are insurance companies. All of them manage money for clients and make the investment decisions for them. In recent years, the new players here have been the hedge funds, who now account for about 30% of daily trading in London.
Pronunciation. Exercise 2.
Long. Ordinary. Stock. Cause. Macro. Rose. Volume. Economy. Most. shops, whole, fall, show, short, important, obvious,
Exercise 3. 1.
Stock values have fallen following problems caused by slow growth.
2.
Lower levels of domestic borrowing are important for the economy.
3.
Obviously, when prices in the shops rose, this caused a drop in the volume of sales.
Speaking.
Reuters today announced a complete ban on petrol-driven cars in city centers. This will have a significant impact on share prices this morning. On the one hand, this will lead to an increase in the demand for electric vehicles. Equally, this will probably result in an increase in the share price of car battery manufacturers. On the other hand, this will certainly lead to a decrease in the sales of petrol car manufacturers. At the same time, this will result in a decrease in the profits of city center supermarkets because shoppers will not be able to use their cars in the center. As a result, we believe we should buy the shares of electric vehicle and battery manufacturers, and we should sell shares in car producers and supermarket retailers. Is that clear? Are there any questions?
Unit 11. Listening.
Thank you all for coming. In this opening meeting, I would like to explain the steps in the audit of your company so that your staff will know what to expect. As you know, when we do the audit, there will be 3 of us in the team. I think you have all met them by now, and we expect the audit to take about 3 weeks. My team will start by defining the scope of the audit. All you will be required to do at this stage is to help us arrange interviews with your top management. When we have talked to your management about your business and its sector and looked at problems in previous audits of your company, we will make a plan and timetable for the audit. This will tell you what we will inspect and the methods we will use. When we have defined this scope, we will begin to examine the accounting systems you use. This means we will check the figures you recorded in your financial accounts against the figures in your company's books and ledgers. So, at this stage, we will need access to your company's books, for example, the sales ledger, plus, of course, the bank statements. Our main concern is to check that the accounts are accurate and to make sure that correct accounting standards have been used. This should take about a week. In the next step, we will examine all the internal controls you have for recording information every day. For this purpose, we will need to see the rule book you have for your staff, which explains your systems. We can then check that the staff follow these rules in their daily work. Secondly, we will need to have a look at real documents, for example, the sales invoices you send to customers and the purchasing documents you use to record each purchase. After that, we will need to visit your factory and offices to do substantive tests. This is when we make sure that all the assets that you show in your balance sheet really exist. So I'm afraid you will need to show us things like your machinery and, of course, the stocks you have. Hopefully this will not cause too much trouble, but we will also need to talk with some members of your staff during our visit. When we have collected all this information, we will discuss the results in our team and make a list of points we have found. The idea is to identify any errors and to help you to improve your systems in the future. We will put all this information into our first letter, which we call the letter to management. When you have had time to study the letter, we will have meetings with your management to discuss your responses. So, you will need to make a plan of how you propose to change the systems to answer our questions. When we have completed all these tasks, we will sign off the audit report and you will need to report the results to your shareholders in your company's annual report. So, that's what happens from start to finish. In total, we expect the whole process to take about 2 months. Is that clear for everyone? Are there any questions? No? Good. Well, that completes my presentation of the audit stages. Perhaps we could now move on and begin to discuss the timetable for all the steps.
Speaking. Exercise 1.
Thank you all for coming. In this opening meeting, I would like to explain the steps in the audit of your company so that your staff will know what to expect. As you know, when we do the audit, there will be 3 of us in the team. I think you have all met them by now, and we expect the audit to take about 3 weeks.
Exercise 2.
When we have completed all these tasks, we will sign off the audit report and you will need to report the results to your shareholders in your company's annual report. So, that's what happens from start to finish. In total, we expect the whole process to take about 2 months. Is that clear for everyone? Are there any questions? No? Good. Well, that completes my presentation of the audit stages. Perhaps we could now move on and begin to discuss the timetable for all the steps.
Unit 9. Listening.
I see from the figures you sent me yesterday that we have a real problem with our cash flow next month. Quite simply, if we don't get some cash quickly, we won't be able to pay our suppliers. Last month, our costs for buying raw materials increased from $50,000 to $70,000. That meant an increase of $20,000 in 1 month. At the same time, the money we received from our sales increased by only $12,000. That surprised me. I thought sales were going well. Why aren't we receiving more money? Sandra, you're responsible for financial control. What's going wrong?
You're perfectly right, Carrie. I'm afraid the problem is with the sales team. In the finance department, we're now having big problems with payment from customers because the sales team has offered customers longer credit periods. Sometimes they've increased from 30 days to 60 days. This means the cash is no longer coming in. Unless we reduce the credit period, we are going to have real cash flow problems. This, of course, is against all our company policy on credit terms.
We need an explanation. Nick, what's going on in your sales department?
Well, I think my sales team has done a great job. If you remember, I said at the time that the new sales targets you gave us for this quarter were very ambitious. In order to meet these targets, they had to offer the same credit terms as our competitors. Sometimes that meant doubling the credit period to 60 days in order to win the contracts. I don't think you can blame us. In my view, the real problem is not the credit period, but the sharp increase in our purchasing costs.
What's your reaction to this, Remy?
Well, I'm sorry, but I don't think it is anything to do with us in the purchasing department. As you know, with the launch of our new products line, we had to increase our production by 20%. Obviously, this meant buying components and raw materials quickly. Our costs have gone up because we had to buy the stock quickly. If we didn't have to get the stock quickly, we wouldn't have to pay more. There is nothing wrong with our stock control systems.
I'm sorry, I can't accept that, Remy. Why is it that we're now paying 40% more for our raw materials than last month?
Quite simple. If you want quick delivery, you have to pay. There is no other solution.
Well, it seems to me we have a real problem. What do you suggest we do, Carrie?
Well, I think the finance department must begin to chase these debts. It's not acceptable that customers take more than 60 days to pay us. If they paid us on 30 days credit, we wouldn't have a problem. At the same time, I think we must talk to our suppliers. If we can reduce the price we are paying for materials, we'll be able to make some savings. Remy, can you talk to them and see if we can get any better terms of payment? Unless we get this sorted out, we may have serious financial problems.